go ahead and get started this morning. Everyone, let me introduce myself first. My name is Garrett Morris. I'm the Director of our Consulting Services here at SageWorks. So it is a pleasure to be with you this morning, and a special thanks to the North Carolina Bankers Association to allow us this opportunity to present to you a very popular topic for the end of 2014 and definitely into 2015 as well, and that will be how to present stress test results to the board. So that will be our main focal point, and again, a special thanks to joining us today to being a part of this presentation. It'll allow us to share some insight with you on this popular topic. A few housekeeping items, of course, to go through this morning before we really get rolling with the presentation itself. First would be questions. Of course, they are welcome. We always appreciate your participation in these webinar presentations that we bring you. So please feel free to use the GoToWebinar panel more towards the bottom portion of that panel to ask your questions. We will be checking that panel continuously through the presentation today. So please, again, feel free to interact with us through the presentation and ask those questions. I'll also just quickly mention that your phone lines are muted, so really, again, that questions panel the only way for you to participate in the session. Additionally, slides, of course, will be available. There will be a link in the GoToWebinar message panel that allows you to access those slides. Additionally, you also receive an email following the webinar with a link to the slides and a recording of today's presentation. So be aware of that as well. It's always a frequently asked question. On to SageWorks. A lot of you, of course, already know who we are, but just for a brief background for those of you who do not, we're a privately held company founded in 1998 and really allow institutions to manage their loan portfolio from start to finish. So it's growing the portfolio maybe with credit analysis and risk rating, and then mitigating risk with our risk management solutions, the stress testing solution that we offer, also along with our allowance product. And we're very happy to, again, be able to service as many institutions as we do in, again, the banking sector or industry, if you will. So, again, just some brief insight in terms of who we are. Now getting more towards, again, who's going to be presenting today. We have with us here Robert Ashball. And Robert is a great member of my team. Predominantly, he works more in the Northeast working with our financial institutions, but he's a senior risk management consultant and is obviously responsible for assisting our customer base and financial institutions with their ALLL and stress testing programs. Rob has more than 20 years of capital market experience and commercial banking experience as both a portfolio manager and risk manager. Predominant focuses from Rob were mortgage-backed securities and commercial loans. And then lastly there, along with his responsibilities with ALLL monthly calculations, he also focuses on institution and concentration stress testing and risk analytics, and again, really helps our client base implement our technology to accomplish those stress testing protocols at their bank. And then lastly, he is a Temple grad, where he actually double majored, I found out this morning, in both economics and international business. So Rob was very busy in the 4 years of time that he spent there at Temple. But again, a great presenter, a great consultant, and very excited to have him on today's call to share not only his current experience, but past experiences with you as well in terms of stress testing results. Okay, let's get right to the agenda, everyone. So the first item that we'll discuss and Rob will go into will be the current state of stress testing. And really, I think that's broken down into two areas. One, understanding what is being asked of you, and then also knowing, again, what you need to be doing and how you present of what is being asked of you. And there's a lot of compliance out there. There's the Dodd-Frank Act. There are percentages of risk-based capital that we need to be aware of in terms of what we're doing within our policies for stress testing. So we definitely want to bring you that current state of stress testing. The second bullet point there, what else is needed? Two questions there. What are we stressing? and what does stress testing allow us to do? So again, we'll hit on those two topics under that bullet point. The third one there, board requirements. Really answering, what do our boards absolutely need in terms of the results and the presentation of our stress testing focus. We'll then move to stress testing summary components, really where we're giving insight on total presentation to your board, again, really breaking that down so we understand what we should be presenting on. And then the fifth one there, we'll close with quite a few examples in terms of stress testing methodologies and presentations, just to give you some insight and some main takeaways within the presentation today. Now, one more other thing before I actually go ahead and kick it over to Rob to get us started with the presentation. We're going to go ahead and launch our first poll question. So there'll be a few of these through the presentation today itself. Again, just allow you to kind of interact with us a little bit more. And the first poll question here that we've launched is, have you been told by your regulators that your institution needs to be doing more stress testing? Again, obviously it's a hot topic. If you could get into that GoToWebinar panel and answer the poll question, we would absolutely appreciate it. And we can even gear our presentation to your response today. So quite a few have voted. We'll give it maybe 5 more seconds. Almost at 90% have voted there. And we are right eclipsing kind of 50%, where most of you are saying that you do need to do some stress testing there. So a good number of you, again, are saying that you need to represent more stress testing results from recommendations by your regulators. But then some of you maybe already have something in place as well, where, again, maybe you're already doing something or you have a policy and a plan in place, but maybe we can help you better that effort as well. So great participation, and we appreciate that. With that being said, again, let me go ahead and formally introduce Rob. Rob, go ahead and share with us your thoughts today on today's presentation.
Jared, thank you very much for the introduction here. Just looking at the poll results, that's really in line with what I've seen with the banks that I've worked with. You know, they're getting comments and feedback from their regulators that, you know, you need to be doing something or maybe doing something more. You know, we've got Basel III coming up here in a couple weeks. There's just been a lot of focus on stress testing, and it gives banks you know, some cause for concern. You know, they're being asked to do stress testing. Well, what do I do? How do I put it together? And one thing I tell banks, when you put together a package, as much as the messages as much as the results. So you need to know how to put together a good, solid package for your board, for senior management. And that's really the goal of today's webinar. You know, you've been told you need to be doing something, but, you know, what do you do? You know, the goal, again, today is you want to be able to put together a package that's going to give your board a package that's going to show you that you understand your risks. That's what the regulators want. They want you to see, they want to see something that shows that you know your risks, you understand your risks, and you're ready to address your risks. So again, putting together that right package is going to show your board and show your regulators how well you understand your risks.
Yeah, so all valid points there, Rob. And again, you know, you mentioned it with Basel III, or again, what I earlier mentioned with the Dodd-Frank Act, or again, just being aware of where you are with your percentages of risk-based capital, maybe for CRE or land development. It's important for us to know, you know, again, the stress testing protocols and programs that we should be employing based on what guidance tells us. So if you would, you know, kind of share with us your expertise in terms of the types of stress testing programs that institutions should be employing based on where they fall within those guidance recommendations.
No, sure, definitely. In general, you really want to focus maybe on your enterprise level stress testing. That's your top of the house, full portfolio, and whether that's a top-down or a bottom-up test, but you want to really want to look at an enterprise-level stress testing. Again, a top-down test for enterprise is really maybe focusing on maybe your historic loss rates, projecting them out 2 years. But then I think you really want to supplement that by a couple of relevant other tests. There's 3 other different types of tests that you could do. You've got a transaction stress test, which is really maybe focusing on maybe one of your larger relationships. You can also do a portfolio test, which again is top-down or bottom-up. Maybe you want to stress your commercial real estate for the board or one of your largest portfolios. And then finally, there's reverse stress testing, and again, that's what the larger banks are doing, where you're going to take a scenario-based test and explore the effects of those changes to the bank's portfolio. So there's 4 different types of tests, but again, focus on the enterprise-level stress testing, but supplement that with a couple other relevant tests.
Yeah, all great and valid points. Additionally, I would say we see a lot of institutions, maybe based on the manpower that they have available to them, kind of identify what type of stress testing they're doing. I think that's a point to raise as well. So maybe, Rob, from your expertise, what have you seen in the market based on, we have only a certain number of hours at hand within our institution. What are you hearing in regards to that?
No, definitely, and that's a very valid concern. Your bottom-up tests, which are really focused on, the financial information underlying each of your portfolios. You're focusing on your LTV and your debt service coverage and kind of grossing those up. Those take time, and the regulators understand that. But in the interest of time, if you get limited circumstances, limited resources, your top-down enterprise-level stress tests are really the ones you want to go to. Those take really a matter of minutes. Again, you're creating a couple different scenarios where you're going to be stressing your historic loss rates to come up with a scenario. Even a transaction test, or maybe you want to stress your largest relationship. That way you only have to worry about focusing on a couple different financial statements. So stressing your largest relationship or your 10 largest relationships could be another very valid test for your board in the interest of time.
Right, and really analyzing those results based on what you're employing in terms of maybe if you are doing a concentration stress test, but you're stressing your largest exposure, understanding what those potential impairment values could do to your capital results and where you need to be in terms of capital adequacy, very, very helpful. So, ways, again, to implement some type of stress testing protocol or procedure in the instance that maybe we don't have the full capabilities of adding another staff or two to roll out a result. So all very valid points.
Looking at current practices, you're probably seeing yourself, okay, I already am doing stress testing. Well, you might be. You're probably doing interest rate stress testing. You're doing your asset and liability management. But we're really focusing on stress testing as it relates to managing your portfolio, whether it's a commercial real estate portfolio or even the top of the house. This is to really help and supplement your existing risk management practices. We're looking to supplement your risk appetite and your lending strategy. You might want to say, okay, am I too heavy in commercial real estate or too heavy in residential real estate? This is going to help supplement that by identifying those risks so you can manage those risks as they are today so you're prepared for the future. You're also going to be looking into setting lending limits. Again, if you're too heavy in commercial real estate, you might want to dial back based off of scenarios that you think might be happening in the future. And then finally, as Garrett touched on earlier, you always want to compare your results for your stress test against your balance sheet to see where you are relative to your capital. Again, as Garrett mentioned, we've got Dodd-Frank, Basel, a whole bunch of other regulations out there that are really, frankly, focusing on capital. Stress testing is a critical component to managing your capital number. So keep all that in mind as you're doing your stress test programs.
Yeah, absolutely. And Rob, pointed out earlier, don't just check the box. Do something with those results. We've mentioned a few of them here, but we've seen most institutions have the most success with implementing a stress testing protocol by, again, doing something aside from just checking the box. Rob's pointed out a few of them, but additionally to that, understanding maybe which products or which concentrations you want to stay away from, or understanding those products that are going to be a little bit more risk averse or going to be a little bit more sensitive to volatile market conditions. Maybe we're strengthening our lending requirements on those when we're doing our underwriting and our credit analysis. So again, just points of reference for you to employ and kind of take away from to really make stress testing a positive experience at your institution. I think, Rob, you wanted to add one more point.
Yeah, to that point, your board is your regulators are asking you to do some stress testing. What they're not telling you is how to put it together and how to present those results. I think if you come back to your regulators and even to your board with a package that's going to detail, and give some context to those results, it's really going to wow them, and it's really going to show them that you understand those stress tests. Putting a little bit of effort into putting a package together is going to really impress them. Give it a little bit of a thought, and we're going to get into this here a little bit later today, but give these packages some thought, and you'll really wow your board and your regulators.
Perfect. So Rob segued us nicely there, and he even asked a question, what do boards require for a good assessment of their risk management efforts? So Rob, speak to our attendee base today about, again, just board requirements. What do they require and what do they need?
Yeah, according to guidance, boards are required to review a stress test at least annually. Again, that's guidance. It's not necessarily mandatory, but it is guidance from a number of the different regulators. But we're seeing boards that are taking risk management seriously kind of review stress testing more frequently. Quarterly would be great, but you're obviously at the mercy of the board's meeting schedules, but at least try and do it more than annually so they're comfortable with the risk management strategies being employed by the bank, because at the end of the day, the board's primary responsibility is to set risk management strategy, and you need to necessarily put together a program, put together leadership that's going to develop a strong enterprise risk management program, and stress test more than supplements that. Again, looking at stress testing, there's multiple different types of stress testing within an enterprise risk management program. Again, we touched on it earlier. You've got, your liquidity, your asset liability management, your interest rate, but you've got your portfolio stress test. You have to be able to understand the risks within your portfolio, where they are today, and what you expect to happen 1 year, 2 years, even 3 years down the road. And then finally, it all rolls into a very strong risk culture. Again, Basel III is really focusing on risk management. So is Dodd-Frank. You need a strong risk culture that includes credit, your loan review function, management reporting, which I can't really stress enough, is very critical. You need to show monthly reports to management detailing your portfolio concentration risks. And then finally, a strong audit function, whether it's internal or external. Again, you need a strong risk culture here. Okay. Okay, board requirements. Again, real quick, we talked about making sure this is being done annually, but this summary that we're going to talk about here is designed to educate the board on the risks contained in the portfolio. Again, you've got a few minutes to talk to your board, whether you're making a presentation or even a couple pages in a deck. You've got a few pages to make your presentation, make sure they understand it, make it stick. So make sure this is to the point. Point is, you want to educate your board on the risks in the portfolio and what you're doing to mitigate those risks.
All right, so we're going to launch one more poll question here. And the poll question is going to be, how often are you presenting your stress testing results to your board? Again, fantastic participation in our last poll question. We thoroughly appreciate your participation to these, and again, we can incorporate them and speak to them in our presentation today. So please go ahead and vote. We'll go ahead and maybe give about 5 more seconds. Quite a few responses, and we're there. Again, 100% participation in both our polls thus far in our effort today, and we really appreciate that. So to speak of that, we have about 45%, almost 45%, are producing stress testing results to their board on an annual basis, and then about a third are presenting quarterly in terms of their presentation effort to their board. And then we had almost another third not really presenting a stress test. So again, maybe some effort there or thoughts that we might explore for 2015 in terms of what we would want to employ in terms of presenting a board presentation. But very helpful information. Rob, I mean, can you just quickly speak to the difference between maybe, again, those that are doing it annually and quarterly? What are your thoughts there?
Yeah, I think I'm encouraged. Definitely, we've got about 75% doing some sort of board reporting, which I think is great. You're doing what's required. Hands off to those of you that are doing something quarterly. It means your board is going to understand your risks, where they lie in the portfolio. It's critical that your board understands, where those risks lie, and it's really up to you guys that make those presentations to present those risks, and I think it's great. For those that aren't really currently doing any board stress testing, I would really consider it for 2015. Be ahead of the game. Your regulators may not have asked about it, but I think if they come to you and say, oh, well, what are you doing? You can say, okay, well, we are doing this. We have a package here. We've already met with our board. You want to be ahead of that game, impress your regulators. Again, it's all about the package and how often you present to your board is really crucial.
Fantastic. Well, to continue along, let's speak to stress testing summary components. And, for those of you who, again, are stress testing from our latest or presenting there to your board from our latest poll there, this might help you just check those boxes or tighten up your ship, so to speak. For those of you who are not, you're going to get a really great viewpoint and vantage point from Rob's expertise in terms of what we should be presenting. So, Rob, lead us through those summary components, if you would.
Definitely. As we mentioned earlier in my bio, I'm actually a former banker. I've actually done stress testing. I've made presentations to the board, so I'm coming at this from very real-world experience, and this is going to follow the methodology that I've developed over the years that have really passed muster with the regulators. I've got 5 simple steps here that we're going to detail here. We've got an executive summary, which is going to really kind of do some high-level information on the results and give it a little bit of context, followed up by a portfolio and economic overview. You want to make sure your board understands what the portfolio looks like relative to the context of the economy today. Finally, the economic outlook. Where do we think the economy is going 1 year, 2 years, maybe 3 years out? Give a little bit of context there as well. And then we want to summarize the stress test methodologies. Tell the board, okay, we've run these 3 or 4 tests. Here's a brief explanation of those particular tests. Here's where the historic loss rate information. Here are some of the variables that we use. You don't want to have them ask questions during the presentation. You want them to understand exactly what the methodology was for those tests. And finally, I think the crux of it, the most important part of it, is the summary of those stress test results. It's the last page. It's the page that's going to hit the home run. You're going to see each one of your different tests lined up next to each other with those results. You're going to see how they measure up against each other, so your board is going to be able to look at a large range of possibilities, let them kind of make a decision what the best alternative, what the best outcome could be, and then you're going to measure those against some key financial metrics. So looking at the next page, how many tests to present, that's different for different banks. In general, I would say you want to look at least 3 or 4 different stress tests presented to the board. It's going to change. You might have 3 1 year, 5 another year. Tests change from time to time as well too. So, but in general, I would say you want to think about 3 or 4 different stress tests to the board. I think at least 2 or 3 of those should be institution-wide tests, whether it's a number of different possibilities or whether it's entirely different tests. But I think you want 2 or 3 institution-wide tests. And then I think you need at least 1 bottom-up test, whether it's maybe your commercial real estate test or your Resi 1 to 4 tests, or even maybe stressing your 10 largest or 20 largest borrowers. I think showing them that, I think, is also very critical. And I think that variable test, that 1 bottom-up, mix it up every quarter, every year, maybe do something a little bit different with that so they can kind of see maybe emerging risks that are coming up in the portfolio. It's good to, I think, change it up a little bit. Now, I touched on a little bit earlier, the different types of tests. I think prior to any sort of management or board reporting, management needs to give some thought to what type of tests are you going to run. You're going to want to do this maybe 3, 4, 5 months out, maybe run a few test cases to get an idea of what sort of, how your tests are currently performing, see if you need to mix it up a little bit more. But I think giving yourself about a 3 or 4 month head start is going to give you, some really good feedback on the type of test that you're actually going to run. And then finally, the test that you're going to be doing, make sure they're relevant to your product mix. If you're doing a commercial real estate test, but you're heavy in residential, that might not make sense. So make sure that the tests that you're doing are relevant to your particular product mix, and really even the state of the portfolio and the economy as well too. So if it's focusing on losses and not delinquency or whatever, keep those tests in context.
I think that last bullet point, in the presentation that Rob just spoke to, really highlights, we should be stress testing, or the frequency of our stress testing should be done based on really what we want to get out of it, right? Again, we'll say it again, don't just check the box, but what you want out of it, I think, helps you define how many stress tests or the types of stress tests that you're doing throughout your yearly effort. So again, great knowledge as well. Great knowledge there as well, excuse me. We spoke to it kind of earlier, again, the different components of your stress testing policy and presentation. Let's get to that first component, which is going to be more the executive summary. Again, the executive summary, more that that process where we're writing in an approach that's going to be more summarization of our presentation, but is a very important part of that presentation that Rob, you spoke to more towards that title slide. So Rob, take us through that executive summary.
Sure. The executive summary, other than the last page, I think is probably the most crucial page because, as with any board, you've got a few members that are going to read everything, and then you've got some board members that aren't going to read anything. So you need to make this executive summary stick with the reader. You want to make sure it's designed and written. So if that reader only reads that summary, they've got enough to make a decision. You want to be able to grab hold of them and say, okay, here are the results. Here's the context of these results. Maybe here are some recommendations. But you want to grab them with some key facts. You want to inform them, but you'd also want to scare them here. Remember, stress tests by nature are going to be negative. You're looking for a worst possible result. Don't scare them, but inform them with that. And remember, you don't have much time with them, so keep this very brief. Their time is valuable. You want to keep them, you give them the right context, show them the results. But at the end of the day, you need to put them in a position to make the right decisions regarding risk management, and those stress tests are going to help them do that.
All valid points. And just one other point I would like to make personally, this is the opportunity for you to show your expertise and really knowledge of your loan portfolio and what could happen based on deteriorating factors or trends, what have you. So again, this is your opportunity to shine within the executive summary portion. Rob, take us through a specific example, if you would.
Sure, definitely. This is an actual example of one of the board reports that I used to do. Obviously, it's heavily redacted, and you can see it's focusing on the 2010-2011 year. But I want to kind of point out a few things here that I think are going to help you when you do your package here. Keep it heavy on bullet points. You've got a few minutes of their time. Just keep it brief and to the point. You want a very brief narrative, kind of outlining the results, the economic analysis, and the credit environment. Looking at the second and third bullet points, you want to kind of give some context to your results. You can say, okay, in this case, you're looking at commercial real estate and builder finance. Okay, here are what the actual fiscal year to charge-offs have been. And then for 2011, here's where we think it's going. But then you're going to hit home with the last bullet point. Okay, here are our stress tests. The second and third bullet points are what we're expecting to happen. But this fourth bullet point is going to say, okay, these stress tests are going to show these results. Here's what our predicted outcomes should be based off, in this case, of 2010 stress tests. And then the next page, again, this continues to be an actual example. You want to identify the key risks and trends. This is more context for your stress test results. You want to help them identify any risks that might be happening in the portfolio. Maybe you've got some rising delinquencies that maybe haven't shown themselves in your ALLL or your stress tests. Helping them identify those trends and any potential risks that may lie in the portfolio, maybe changes to underwriting guidelines or so on. That's what you're going to want to put here. And then you want to talk about how you're maybe going to mitigate any of those potential trends. What's management doing to help get ahead of any of these potential risks? And then finally, conclusions and implications here. What are we expecting to happen to the economy, or if these trends were to continue? In this case, the first bullet point, we've got high levels of criticized and non-accrual loans. What's going to happen to those if these kind of go unchecked? Put some context into your stress testing, even ALLL, to help them kind of get ahead of any of those potential trends. You'll hit this out of the park with that.
Very good, very good. So we'll move to the second portion of that stress testing summary presentation. And again, we talked to it just a moment ago about the importance of really evaluating and understanding your portfolio and economic overview. So Rob, again, take us through that and
Sure.
that presentation result.
And really what these pages are going to be, these are going to sort of go in more depth on a couple of those bullet points that you saw in that executive summary. You're going to review the current status of the portfolio as it exists today, as it exists in the current economic environment, the credit environment that we're in. You want to highlight any concentrations that we have, especially anything that's showing any distress. Again, you may be recreating the obvious. They may know that they're high in commercial real estate. Tell them that again. But if you've got certain parts of maybe your commercial real estate portfolio that are showing stress, maybe a region, maybe a product type, get ahead of that number. Show them what's happening so they can, again, put these results in the proper context. Identify any causes and concerns. If you've got something out there that you think is causing this, whether it's a change in management or you've got some economic concern in a certain region, identify that. The board's asking you for your opinion here to an extent because it helps them, again, build the context of these stress test results. But identify any causes and concerns that you have with the portfolio and let them take it up because at the end of the day, it's their job. And then finally, you're going to summarize it and follow up with anything management's going to do to help mitigate that risk. Think a little bit more detail. If you're heavy in commercial real estate, you're going to identify ways that the management's going to maybe get commercial real estate under control or help them manage above that 300% limit. But you want to kind of bullet point those ways management's going to mitigate any risk that's going to show. The next page is, again, real-world examples, heavy on bullet points, heavy on graphs. You've got a few minutes to grab the board's attention. Boards like graphs. They can see the trends that are developing. In this case, we're looking at national high-level trends. Where this is a portfolio and economic overview focused on commercial real estate. This is going to give the board an opportunity to see what's happening in the overall economy. And especially in a couple bullet points relative to where this current portfolio is.
So Rob, a few of the graphs illustrated on the page here, are there certain areas that you would recommend institutions go to in terms of data sources to back up their thoughts and their estimations, maybe on a graphical basis or not?
Yeah, there's a number of different sources out there. You need to consider the sources and in the context of the data being done. Moody's is a great source. Bloomberg's a great source. SageWorks Bank Information is another great source for some information as well too. Make sure you do some validation on your graphs so they understand the context as well too.
And I would even add to that, the FRED is another great source of data available at your fingertips. So definitely back up your findings and your conclusions or thoughts with context, just like you want to do in your allowance process with your qualitative factors, which is also such a hot topic in risk management. Backing up those findings, maybe promoting, again, directional consistency, never a bad thing.
Yeah, great point, Garrett. Thank you, definitely. Next page, economic outlook. Where do we think things are going? What's management's expectation on the next year, 2 years, to again, help put these results in context? Do we think the economy is going to get better? Do we think it's going to get worse? So you want to kind of hit a couple bullet points. These are more than the average bullet points. You've got a fair amount of detail in here, but keep it very brief. Again, show more graphs, but you need to tell the board where you honestly think the economy and the portfolio itself is going in the next year, 2 years, 3 years.
Perfect. So the fourth item, again, in our stress test summary presentation would actually be a summary of the stress test methodologies. So Rob, take us through this.
Sure, no, definitely. you're going to give the board 3, 4, or 5 tests. You don't want to have them sit and ask you, okay, well, tell me about the background of these tests. Tell them up front. Tell them what each test is doing. Tell them where your loss rates come from. Tell them, just give them some background information so they're comfortable with the methodology you use to run those particular tests. Again, keep it heavy on bullet points. Identify any relevant information regarding those stress tests. And again, as I mentioned earlier, stress tests might need to be changed periodically, refined, as older tests prove to be outliers. So change it up a little bit here. Don't let your board sort of get comfortable. Change it up a little bit, but tell them exactly what you're stressing here. Give them the parameters so they're comfortable with that. And finally, I think you want to, after the meeting, go over with management. What was the feedback from your board on those stress tests? I think it's very important to review the feedback that you're getting from your board on those stress tests. If they want a different test, give them a different test next time. But I think it's good to kind of really consider board feedback on the test that you're running. Next page, again, is another real-world example where we've talked about just how you're going to go ahead and identify your stress tests here. And we've given 2 examples here. We've got a SageWorks model. In this case, we're going to be focusing on a top-down test. It's a 2-year loss number here. That 2-year loss number is going to be the first part of a range. You always want to create a scenario range for your board, so you're going to create a 2-year loss number based on your historic data, aggregated and maybe modified to give an extreme or a severe example. And then finally, we do have a Dominion Bond Rating Service. That actually is an existing test for the Dominion Bond Rating Service that's focusing on commercial real estate. You can see that it's focusing on loss experiences from the late 80s to the early 90s real estate cycle. Again, focus more on a national view in that case. So give them the context here of what you're stressing. You just do not want to have them come back to you in the middle of the meeting. Okay, well, tell me about this. Give them just the details on it so they are comfortable with what's being tested.
Perfect. Very good. So the last bit, the last component of that presentation, those results. Obviously, a very specific section, a very important section to see what's going on with our capital levels. Rob, take us through the results.
Again, this is probably the most important page. This is one that's really going to hit home each of the different results. It's going to put them all in context right next to each other. It's going to summarize those results. And what you want to do is you want to place each individual result next to each other so you can see how they line up next to each other. Hopefully all of your results sort of overlap each other. So this is going to help give your board the proper context of the range of potential expected results. A lot of cases, banks are going to predict losses. This is going to be maybe a sort of almost a mini stress that maybe your treasurer or your CFO is going to do. They're going to say, okay, for 2015, here's what we're expecting to happen loss-wise. You put that in there right next to your stress test results and see how you stack up. And then finally, you also want to show these losses as a percentage of bank capital. And then I think a good example is the percentage of pre-tax, pre-provision net income, so they can kind of really kind of see that impact because that's what they're focused on.
Yeah, those last 2 bullet points very critical. We all know the percentages of where we need to be in terms of our percent of bank capital or pre-tax or pre-provision net income. And that's why we do our stress testing, right, to make certain that, again, we're within those percentages, those capital adequacy levels we're maintaining, we're at. And that's what, again, really your stress testing process allows you to do. See where you are after and before on those critical metrics.
Sure. Great example. Thanks, Garrett. Before I jump into an example here, I want to talk a little bit about backtesting here. To show that you've checked your work, that you understand your work, you need to consider backtesting your results. So I wanted to bring this up because backtesting is becoming such a common phrase that we're hearing out there. At the end of the day, what backtesting is, it means that you've checked your work. Your historic loss rate numbers sort of fit into your models here. They're accurate, but backtesting at the end of the day is really checking your work, checking your actual results with predicted results. Touching on that, your report, you'll see here in a few minutes, you want to compare your actual net charge-offs with your prior year stress results. You want to see how well you how accurate you were with your stress test. If you predicted $5 million worth of losses and it's only showing up $3 million so far, well, maybe you need to tweak some of the components of your stress test. Maybe you need to throw out a stress test. But you always want to compare your prior year results with your current year's actual charge-offs to make sure that you're just not out of line. Kind of getting into the usefulness of a stress test. If you've got a test that's out of line for whatever reason relative to your actual results, get rid of it. You know, it's not uncommon for a test to have a useful life of maybe only a couple of years. You know, some tests work better than the next, and change them up a little bit. But that's what backtesting is going to help you do. And then finally, this is the results of an actual test here. And again, I'm going to give it a little bit of context for the viewers here. This is focusing on 2010, 2011. So this is a pretty severe result time frame here. But you can see, looking at it from left to right, we've got a forecast that was prepared by the CFO's office, and then we've got 4 different stress tests. You can see we've got a range of results, a mild scenario, supplemented by an extreme scenario here. You can see using the Moody's model. We've got both those ranges here. We've got 3 other stress tests all measured against itself. You can see that in general they all overlap each other, so you want to make sure all of your tests sort of are in the same range. It shows that, you know, you're all expecting the same desired result. And at the bottom of the page, you're going to see the comparison against your 2009 tests. What do we predict in 2009 versus 2010? And then finally, we've got the actual net charge-offs. In this case, we had a mid-year fiscal year-to-date meeting, so we only had partial years, but you want to put your actual net charge-offs in there to see, in this case, how accurate you were relative to your 2009 test in this case. You want to compare these results, again, I mentioned horizontally, show those ranges, and then measure those results. And finally, backtest, backtest, backtest. Again, just to kind of follow up here a little bit, key items to remember. It's up to you to inform your board. This is the chance, as Gary mentioned earlier, your chance to put together a package that shows that you understand your portfolio, where it is today, where you think it's going. Inform your board, let them know of any risk that currently exists or may exist in the portfolio. Again, you're being asked to do it annually, but I would consider it quarterly or semi-annually, even if it's just a brief overview on maybe a one-off sort of a stress test, but consider informing your board more frequently than annually. Again, review each stress test periodically. You want to make sure it's performing optimally, it's in line with your actual results. Anything that's out of line, get rid of it. Don't be worried about changing things up. But it's important to work with management a few months in advance to make sure your tests are accurate and you're getting the right stress test in there. Again, backtest existing tests, make sure they're relevant, just like I mentioned before. And as Garrett mentioned, I can't stress it enough, do more than just check the box. You know, your regulators are asking you to do some stress testing. They're not telling you any more than that. This is your chance to put together a package that shows that you understand these risks, wow your board, wow your regulators. There's nothing more satisfying than saying to your regulator, okay, we're meeting with our board, you know, 3 or 4 times a year, and here are the packages we're putting together. They're going to be impressed. Trust me, they will.
Fantastic. All very relevant and valid points. Rob, let's go ahead and launch our third and final poll question. And everyone, you know, again, we always want to make these presentations more on just methodologies, thought leadership, and allow us to kind of provide you from what we're hearing in the market, from our expertise, important thoughts to convey for your future efforts and processes. But we of course do want to ask, would you like to learn more about the SageWorks stress testing application and how it can maybe, again, assist and automate your process and make certain that through that presentation effort that Rob spoke to so well today, we can more or less kind of do for you, provide you an automated effort and a consistent effort. So again, we've had great participation throughout our first 2 polls. 100% we had. We would love to see that again on this poll question as well. So please respond as accordingly. Maybe 2 or 3 more seconds. Great participation. About 80% of you have voted there, and again, we do appreciate your responses. Wrapping up our presentation today, first I just want to thank Rob Ashball. He's such a valuable resource for us, and he did a great job kind of leading us through the presentation today to really understand how we can develop that board-level stress testing package. Please, always, everyone, feel free to reach out to us as well. Do not hesitate to contact us or Rob specifically, and that we also have other information available to you through our LinkedIn groups, and then, of course, our website and other resources that we provide on our website. Before we wrap up and kind of finalize today's presentation, we, of course, do want to open it up for questions. So, again, I'll reiterate that questions panel is available in the GoToWebinar panel itself. Feel free to go to that questions panel, key in your question there. We will read them out loud, and then we will certainly respond so that everyone benefits. We did have a question come in more towards the middle of the presentation, and the question was, what do we most commonly see where do we, excuse me, I read that wrong. Where do we see stress testing being done? Is it more a component of a finance department or more the accounting department? Rob, what are your thoughts?
It's a good question. Something we actually do get quite frequently. I think we're generally seeing stress testing done in typically one of two areas. One, like Garrett mentioned, the CFO, treasurer side of things, the accounting side. We're also seeing it be done a lot in the credit side as well, too. Stress testing is used as a portfolio management tool. But I'm going to even open up a little bit more. If you've got a risk management, a chief risk officer office, it can be done there as well, too. There's 3 or 4 different groups that I think can use stress testing. Your accountants, your CFOs, your treasurer's office, you're going to stress the components that are going to help with your capital calculation. It's a great tool to help with your capital calculation. But also it's a portfolio management tool, so your credit officers and your credit managers are going to love that as well, too. And again, finally, anybody that's responsible for board reporting, top of the house reporting is going to use this as well, too. So.
Yeah, and to add to that, I would say, maybe calling on both levels of expertise can only benefit your process and your exactness of your process, and again, incorporating both areas there, I don't think hurts at all. And we commonly see a split in terms of those efforts within financial institutions that are rolling out stress testing practices. Another question there, do we recommend moving down from an annual stress test to more of a quarterly stress test? So would we recommend doing a more frequent stress test? Rob, hop in.
Yeah, I don't think you can frankly stress test enough. I think you should be doing it, fairly frequently on a monthly basis. The question is probably more of how often do you want to communicate those results to management, to a board. And I think, your boards probably are only going to meet quarterly, but I think it's a great opportunity to kind of give them a snapshot of what you're working with. Again, they're charged with setting risk management. You want to see what sort of endeavors you're undertaking. That helps if you show them a couple stress tests that are going to focus on maybe a certain part of the portfolio, a point of emphasis that you want to make. Keep your annual stress test, your main report, sort of looking at what we did here today, but supplement that with maybe a page or two that's going to show them what you're currently working on, what's keeping you up at night, what is management looking on from a risk management standpoint. So I think having those little mini reviews is going to ultimately help that annual review process.
Yeah, and again, what are the goals and what are the efforts and what do we plan to do with that information that we gain from the stress test? Again, I think that also helps us develop an accurate and sensible response to that question. Everyone, it looks like that's going to be it for questions today. Again, thank you so much for attending our presentation. Thank you so much to the North Carolina Bankers Association for allowing us to bring this to you. Any questions, again, don't hesitate to reach out to us there as a resource. Have a good rest of your work week and a Merry Christmas to everyone. Thank you again.
Thank you, everybody.